Most people think that FX, foreign exchange, is a low risk investment, but that could actually hurt you. But I get it. Everyone tells you that with foreign exchange, there's potential for significant returns without really highlighting that the higher the return, the higher the risk. So it's easy to believe. But if you look at when we had the Brexit referendum, when that happened, the British pound absolutely tanked within seconds of the announcement. So FX can't possibly be a low risk investment because with the potential for significant gains also comes a potential for significant losses. The reason for it being a high risk investment is because it's incredibly volatile. So currencies move in a matter of milliseconds. If you've ever had the chance to look at Bloomberg or Reuters or one of those providers and you put in, just for example, a simple conversion of euro US dollar, you can literally see every single second the price is literally moving and moving and moving, and it's just so incredibly volatile. One of those markets that you need to constantly keep an eye on it. You need to have time to literally sit in front of your screen and follow what's going on because it is incredibly volatile. Another thing is that, for example, if you're trading shares and equities, since we're in London on the London Stock Exchange, there's a limited time that you can do that, right? Quote me on this because I'm not very good at remembering when the different markets open, but if I'm not mistaken, the London market opens at 8 or 8:30 and closes at 4:30. So at 4:30, when you leave, you know that your shares just sit there. You go to bed, you know that the price hasn't really changed. When you wake up in the morning, unless something unexpected happens, which isn't necessarily a daily concern. But with foreign exchange, it trades at all times during the day and night because it's a global market. You put a trade on thinking that the British pound will rise, but something while you're sleeping happens in another part of the world and you wake up to see that the currency has moved in the opposite direction. Now, the other reason why, or the third and final reason why it's incredibly risky is if you use any trading platform, when you invest into, for example, equity, let's say if you want to invest £100 into a share, you have to put those £100 and for those £100, buy the share. But with foreign exchange, most of the platforms and generally use something called leverage, which means when you want to invest £100, you're actually only needing to invest £10, but you get exposed to £100, which means that when things go against you, your liabilities become incredibly high, especially if you end up investing more than you can afford. So that's something to be very, very aware of. Really understand what that is and how it can be used in a smart and in a careful way. Also, when it comes to foreign exchange, and this covers trading in general, right? But you need to have 3 essential things in order to succeed. You need proper risk management, a trading strategy with an edge, trading psychology, and discipline. And so that's really where the emotional sort of tug of war between when it's going up, you're wanting more and more and more, and when it's going down, you're wanting to recoup your losses. That's where that trading psychology and that discipline, controlling yourself and controlling your emotions, is very important.